Scrying for profits. Channeling stock market revelations, for uncertain times. In our Scrying for Profits video, How to Value a Stock, we described our methodology with respect to stock valuation, which we will apply now to Nvidia, a stock very much in the news. Not least with respect to these two ladies, Nancy Pelosi and Cathie Wood. Pelosi is the Speaker of the House in the U.S., whose husband, Paul, a venture capitalist, sold 25,000 shares on July 26, at an average price of $165.05, according to public disclosure. On the other hand, Cathie Wood, whose ARK Innovation ETF, bought almost $32 million worth of stock on September 1, where the stock closed at $139.37, down 7.7% on the day. Before we go into our valuations, it is worth taking a look at content from ticker symbol U, a channel specializing in fundamental analysis of all things tech, stocks and of course tech stocks. A link to specific TSY content relating to Nvidia is in the description. Our valuations require three financial indicators, which are book value per share, earnings per share, and annual earnings per share growth estimates for the next 5 years. These indicators can be readily found in Yahoo Finance. So, let's take a look. Google search for Yahoo Finance and click the link. Type Nvidia in the search bar and click on the Nvidia option. On the Summary tab you will find the trailing 12 months earnings per share of $3.73. Now go to the Statistics tab and scroll down to the Balance Sheet, where you will find the most recent quarter, book value per share of $9.58. Finally, go to the Analysis tab, scroll down to second from bottom, where you will find the Analyst Consensus, year-on-year earnings per share growth rate, expected for the next 5 years, of 22.80%. Now we will use these financial performance indicators to determine an instantaneous value for Nvidia. We have a book value of $9.58. We have an earnings value of $3.73. And we have growth of 22.80%. Remember, our general formula for instantaneous value is equal to the book value plus 2.5 times the growth times the earnings. To calculate our terminal instantaneous value, which is probably the maximum price we would pay during a bear market for the stock, we use a growth rate of 2%, which is the same as that expected from a business growing no faster than the broader economy. To calculate our growth instantaneous value, which is probably the minimum price that we would expect to receive during a bull market for the stock, we would use the consensus growth estimate of 22.80%. So, the terminal instantaneous value is given by 9.58, the book value, plus 2.5 times 2, the terminal growth rate, times 3.73, the most recent trailing 12 months earnings, or $28.23. And the growth instantaneous value is given by 9.58 plus 2.5 times 22.80, the consensus per annum growth rate expected over the next 5 years, times 3.73, or $222.19. At the current time of valuation, the share price is $136.47, which is below the growth value and above the terminal value. A defensive investor would therefore see little value in the stock at these prices, potentially seeing an 80% decline in a bear market. However, a growth investor might potentially see 80% upside in a bull market. Our calculation of instantaneous values holds true only for the data available today and will necessarily and desirably change as quarterly earnings releases are made. Even though a terminal value may appear to be a long way off, we are in a bear market, and if earnings rise, as pricing deteriorates, then a buying opportunity for defensive investors may present itself. Growth investors will then have missed out on a better buying opportunity, not that they will care much. Likewise, if the market rallies on improved outlook, defensive investors will have potentially missed out on the chance to invest in a high-growth stock, with expectation of returns at the growth value, not that they too will care much. In the interests of disclosure, we are short on Nvidia at $160.04. Remember, it may be a great time to invest but a terrible time to buy. Forthcoming revelations may tell. Until then.
Fly, you fools!